So here's how we suggest doing it. You label China a systemic national security threat. You do it in Section 232 of the Trade Act of 1962. So that is the legal justification upon which the Trump administration did its national security tariffs on steel and aluminum. And the reason for doing this is that you want to signal to the world, China poses a systemic national security threat. We're going to reduce our dependence on this market to zero over time. But we're going to do it in a ratcheting way that Congress is going to control. So it's not going to be moving in an ad hoc way with the president deciding day by day what the tariff should be. It's going to move in a slow and controlled way, but it's going to, once the ratchet mechanism is begun, it's going to be difficult to stop. The idea is that this will give firms and capital markets a confidence that over a period of time, at the end of the window, manufacturing in China will not be possible, but that everyone will have to find their own way of producing outside China, and the investment will come first, and then the jobs will follow. We think that that approach could be coordinated with core US allies, particularly Japan, Canada, the UK, and Australia. There has to be a dual-part message to Xi Jinping, that not only we can create unacceptable costs and risks for him if he chooses to cross US red lines, but also that there is a world that he can live with if he chooses not to cross US red lines. And it is very important that we extend that thinking into the economic sphere just as we do in the nuclear sphere and the conventional military sphere. So I think this is a very relevant and important question to ask. Reassurance is not weakness. It is a sign of thoughtful and effective deterrence. To answer the second question, which I think is very important and also related to the first, I think you have to understand that Xi Jinping is pursuing his own strategy of de-risking. It's called dual circulation. And if you read any remarks that he has given on economic security since around 2018, it's very clear that he is sending the message across the party state that he wants to break China's dependence on external production, especially in key science and technology areas. Now, work that I have done, which is coming out soon, separately from this project, looks as systematically as we can, based on the open source literature that we have from China on how this has been interpreted. And the view seems to be there is a significant risk that trade war, 贸易战争, could escalate or evolve into financial war, 金融战争. So the threat is already there, that the United States might employ sanctions in some kind of crisis, or even might try to tempt China into a crisis in which it would employ sanctions. Xi Jinping has been working as hard as he possibly can to build China's resilience to the sorts of sanctions that the United States imposed on Russia, and I'm sure that the example of 2022 has established the precedent that sanctions will always be on the table. But one of the things we learn from reading the PRC literature, which informs our finding in this report, is that China is increasing its confidence that it has resilience to that initial shock. And Russia's experience overcoming that initial shock should be a reason for some positivity and optimism. China can, to a certain extent, make itself sanctions-proof insofar as it can tighten capital controls, the ability of capital to flow out of the country, insofar as it can get its currency used overseas and get some of its key trading partners on China-controlled trade settlement mechanisms. And as China gains increasing certainty that it is building resilience to that financial gut punch, the threat of sanctions won't go away, but it will begin to lose its deterrent effect. The thing that China can't work around is the threat to take China's external market away. And if I can just move to the next slide, this is a bit too punchy to end on, but it's important to throw in the supplementary slides. This is Brad Setzer's data. This is his calculation of China's true current account surplus, the amount that China is exporting less the amount that it's importing. And as you can see, this number has skyrocketed since COVID, because for the reasons that Mark mentioned, the stagnant consumer, the horrifically problematic real estate situation, China has run out of things to invest in, and the Chinese consumer isn't buying stuff. So the only way to deliver continued growth is to subsidize manufacturing to sell to the rest of the world. This inevitably creates a conflict of interest between China and other countries that want to manufacture stuff. And we're seeing this in the case of Europe, in Indonesia, Brazil, all countries that have imposed trade restrictions of some kind or another on products from China. The thing that China cannot fix, because it is a chronic condition of China's political economy, is that if China runs a big current account surplus and they export more than they import, someone else on the other side has to import more than they export. And so for countries, including many countries in the global south who were talking about being part of the coalition, this means as long as China is part of this integrated global economy, there's not a clear pathway to industrial development. So in a sense, while what we are talking about is not the big scary stick of the financial gut punch on day one, in a sense what it is threatening Xi Jinping with is something that is much harder to defend against, because it's threatening something that is just endemic to the model of political economy that he wants for his country.